Welcome, I'm Danielle Gates with D. Gates Wealth Management, and this is our first video that's accompanying your performance review for third quarter 2024. Today we're going to talk a little bit about what the market has done in the third quarter, but first we'd like to introduce Terry Schneer. He is our investment strategist, new to us but certainly not new to the industry. Terry, would you like to tell us a little bit about yourself? Where
Great.
you're from?
Thanks, Danielle. Excited to be here. My name's Terry Schneer. I born and raised in New England, New Hampshire, and have been here in Southwest Florida for the last 20 years. My investment history has been 38 years in the business. Most of my career was with A.G. Edwards & Sons. In 2004, I moved my practice here to Southwest Florida with Wells Fargo. And in 2011, went independent to be able to be more ability to customize and manage portfolio management for my clients.
Well, we're happy that you have joined D. Gates Wealth Management. So first, tell us a little bit about what happened in the third quarter of 2024.
Yeah, great. Third quarter was a little bit of a washing machine. We've been all over the board with the markets and the emotions of where we've seen things happening in the economy. Third quarter earnings were pretty strong, which is great, but then we had a little hiccup with what was going on throughout other parts of the country and the world, mostly the world, with some upsets in Japan that took us for a surprise at the beginning of August. And it's not uncommon that we see these things kind of come out of the blue once or twice a year, but since then the market has recovered for that. And we're looking forward to what we're seeing here coming into the fourth quarter.
And so what should we be expecting, or what can you tell us about what we should be looking for in the fourth quarter?
I think the number one catalyst that's important going into the fourth quarter is the fact that the Fed finally, after 2 years of being more of a rising interest rate environment, has changed their policies. And as we saw back on September 18th, is the Fed lowered rates. And not only did they lower them a quarter that most people were thinking, is the Fed took an aggressive stance and went 50 basis points, which was showing that it was time that interest rates need to start to come down. That's going to be great going forward for the rest of this year and into 2025, as most people now will have a little more spending. Their credit cards rates will come down. People looking to buy a house now will have lower interest rates on their first-time home buying or refinancing. So this is going to set the trend for the next 6 to 12 to 18 months as we continue to see lower interest rates. One other big catalyst is, as we all know, within 45 days, we're going to see who our new president's going to be. And they're both promising the world to decide who can get their votes. And it's going to be interesting. The polls are kind of neck and neck. So we're being a little more cautious of where we might see things settle out here in the next month to month and a half. And it's also going to be important to see how the House and Senate goes. And that's going to help try to dictate some of the fiscal policies as we go into 2025 too. But I do think that rates will continue to look to be lowered. And the Federal Reserve has set that tone, which is going to be more of a very important catalyst for the markets.
Very much agree. So thank you so much for tuning in to our first video. We'll have these being accompanied by your performance reports going forward. We also have some great things, events coming up that you can tune into both virtually or in person. So please check our website for our upcoming events. And of course, if you have any questions at all about your accounts or would like to talk to Terry, Nicole, or anyone in my team, please don't hesitate to give our office a call.